Welcome back to the weekly trade recaps. Today I'm going to be covering the first week of February and how I was able to make $29,000 this week in realized profits and over $100,000 this week in unrealized profits. And there's obviously a difference. Realized profits mean that this is positions that you closed, money that you took home. Unrealized means those positions are still open and you were still swinging them and you haven't closed them yet, which is what I'm doing with some of my positions. Now, in today's video, I want to talk about a few different things. First of all, I want to talk about knowing when to trade and knowing when not to trade and when it's okay not to take a trade. And also I want to talk about the overextension reversal, which is really what helped me make the bulk of the gains this week. Even though my realized gains came off of a short, the bulk of the gains that I made came off of the unrealized gains that I made came off of that overextension reversal. Now, as always, first of all, let me show you the live broker login. You could see right here, this is my live broker. Today I made $87,000 on the week. I made about $150,000 on the week, and for the month, past few months, I'm up about $300,000 for basically the last month or so. So those are my profits. And again, these are unrealized. So these would be, realized profits, unrealized profits. Now let's start by explaining when I decided to trade and when I decided not to trade in the markets. And as always, let's get straight into the chart so we can look to see kind of the market environment that we've been in. So in the beginning of the week, we had a lot of kind of volatility here near the moving averages. And last week, I had a good feeling we'd probably break out here and make a big push up, but all my positions were getting stopped out. And this is something I kind of covered in the weekly recap. Everything was getting stopped out. And you have to know yourself as a trader. When things are getting stopped out, when your positions aren't working, the market is clearly telling you something. It's telling you that whatever you're doing right now is not working. So here I was trading breakouts really well. They stopped working. And then I started trading undercuts here. Then I started getting stopped out later on a lot of the undercut trades that I took, and then I stopped trading altogether in the beginning of the week. And you can look at my dashboard right here on TradeZella. You can see on Monday and Tuesday I didn't take any trades because I didn't have any confidence to buy anything long, and there wasn't any short setups yet, right? So I just didn't take anything because there wasn't a setup for me to take that I was very confident in. And with trading, sometimes it's okay to admit to yourself that you don't know what's going to happen in the market, and the best trade is just to not take a single trade, right? And not do anything in the market. And that's exactly what I did the first 2 days until I saw a setup that fit my criteria, and I was able to catch a very nice short on this trade. So first of all, I'm gonna explain why I was even looking for shorts in the first place, and then second of all, we can get into the trade recap. Now, the reason why I was looking for shorts in the first place is because the market started to lose its key moving averages. So you can see on Tuesday right here, we got under the moving averages. We broke under this kind of big low that we had at 618. And it was very clear that we probably were going to roll over a little bit, at least to this low right here. And the market wanted to, push a little bit lower, which is why I was obviously looking to take things to the downside. Also, a lot of my long positions were stopping me out from last week. Every single new long position that I took got stopped out, which made me think that now we should be looking to get some traction on the short side. So the only trade I took on the week, pretty much the new trade that I took with options, was on the ticker MU. And this was the short that I took right here on this day. So we were setting up in a pretty tight 4-day base. We had an RDR off of the highs, meaning we had a rejection of the previous day's high, came back under and printed a massive candle on volume. This is kind of like your first sign that a stock is potentially starting to top. It got very extended from the moving average, came all the way down to the 8. Now notice how this stock, every single time when it's been on this big uptrend right here, every time it's hit the 8 EMA, it's got a pretty nice bounce off of it. Hit the 8 EMA, pretty nice bounce off of it, right? So the first time this thing hit the 8, right, bounces a little bit, but then look at what it does the next day. It closes all the way at the lows. That's telling me that this stock is getting ready to roll over, and if the markets go lower, it's probably going to put in a massive down day, which it did, right? So on this day right here, it was actually down 12%, and we were able to catch this whole move to the downside. Now, how was I able to catch it? All I did was I waited for the stock to kind of print a important level of support, and it was very clear it was right here. So if we go on the hourly, we can see that a little bit better. It held here, and I was just waiting for the stock to break below. Very, very simple stuff. And the only thing I was looking for other than that was volume to confirm. And all my executions are done on the lower time frame. So once I find the level that I'm looking to trade, I go down to the 5-minute time frame. And you can see right here, we had a break below. I didn't take the trade right away off the morning because I usually don't trade the first 5 minutes. I took it right on the second candle right here. And it wasn't even, the best entry that you could have had throughout the day, because right here was actually, a little bit better. I took it right here and my stop loss was at the high of day. And that is the most important thing. You have to take a trade where you have super, super small risk, because even though I shorted right here, my max loss would have been about 5% if it would have ended up taking out this high, because of how tight my entry was, right? I entered right here and how tight my stop was at the high right there. So you can see it never ended up taking the high and ended up rolling over and making a massive move to the downside. And as the stock was going down, I was trimming out of the position, taking profits. Again, you never want to just, hold things forever. You want to have a proper exit strategy. And the way that we were exiting this is looking for previous levels of support. So if you look at the daily chart right here, you can see you have a big level of support. That's going to be your first target. Right here, you have a big low of support. And right here, you have the 21 EMA. Those are pretty much my 3 targets. And if you go down to like the hourly, you could see this as well, right? So right here, obviously you have the gap fill, which is going to be support, broke that. And then I hit this support level, which was my second trim. And then I trimmed into the 21 EMA. Unfortunately, I didn't even get, a good trim all the way down here when I made a new low under the 21, because that wasn't in my trimming strategy. My next target was all the way down here. And unfortunately, obviously it didn't hit that, but it's okay, right? Ended up hitting a really nice trade on this, about 150% on that trade. So you guys could see right here, MU $29,000 on this one right here. And this was the kind of instrument that I took. So the 213 380 put, and the net ROI was 78% on this trade. So really, really nice trade. My only trade with options of the week, and the rest of the week I did not trade options because I didn't really know what was going to happen, and that's totally okay. Right? Because the market was so wild and there was massive moves in the market. I really didn't want to do anything else. And sometimes it's okay to admit that you don't know what the market is going to do. But I did take a trade with shares, which ended up making me a massive return. Obviously, you guys saw the $85,000 today. And that trade was something I like to call an overextension reversal. And this is a concept that you definitely want to be able to learn. And it's one that helped me, be able to catch some of these moves. Now, the reason why, first of all, I traded shares is because a lot of these moves were happening after hours. So obviously with options, it's not going to be possible to be able to trade the after hours. And the second reason is obviously that you have potentially lower risk with shares, because you could put a stop loss overnight as well on a lot of these stocks now because they have overnight trading. So you're able to manage your risk. Now, the thesis that I took on the overextension reversal, you can see we've been going down on the NASDAQ for the last probably like 7 days, right? From the high right here, down, down, basically, this was a little bit of a bounce, but down, 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 right? We were very, very extended. Now, we broke a key level of support right here. And in the post market, right? So if we turn on the after hours, you can see we're getting even lower, right? We got way, 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 way extended. And when a stock gets so extended from the moving averages to the point where it is super far away, usually around like a 3x ADR% away from the 8 EMA, there's a good chance it's going to reverse and kind of spring like a rubber band, right? This is called a mean reversion. Mean reversion, you want to think about it like if we go on a kind of like we draw a spectrum, right? So this is going to be, our spectrum right here. And then we have this being kind of like the middle of the spectrum. If you have a big move here and a big move here, right, price wants to at least return to the mean before making a continuation, right? The mean basically means, the average, the middle, right? So whenever you get an extreme move, price wants to return to that mean, right? That doesn't necessarily mean you should go bottom fishing, but there's a right way to do it to be looking at some of these reversals. And the right way to do it is to see where stocks are getting into really, really important levels after becoming super oversold to the point where they're so extended from the moving averages, right? So for example, look at Oracle. This was down about 21% from the 8 EMA, and it was coming into the 200-week SMA, right? So this is one that I was definitely looking to for a bounce. You can see it actually bounced right off the 200 SMA. There was a ton of stocks that were doing this. Now, the biggest trade that I had on this was on the ticker IREN. This one doesn't look like it was, down much, but in the after hours, it actually took out this low right here, and it took out the 200-day SMA. right? Which is why obviously I took it for an overextension reversal. And if you look at the pre-market, you could see exactly what happened. Overextended from the moving averages, made a massive bounce. I ended up buying some shares when it reclaimed back into this level right here at $33. Ended up catching a beautiful reversal. Another one that I took for the similar reversal was on the ticker NBIS. On the daily, you could see it was down 1, 2, 3, and 4 days in a row technically, because in the post market it was down as well. And then when it ended up reclaiming the previous low right here, I ended up buying shares at $75 and now it's trading at 86. So a lot of the profits that I did make on this was a shares trade. And you can see all of these are coming off of massive levels of support: 200 SMA, 200 week SMA, 100 SMA, big weekly moving averages and daily moving averages. And this is what happens sometimes in the market, guys. Too many people get excited. They want to short, right? They want to short the whole and then they get trapped and the market squeezes super hard the other way. This is why it's always important to ask yourself, where is the probabilities for my trades in the market? Is it to the upside? Is it to the downside? If a stock has gone down 4 days, 3 days in a row, are you really going to short the whole, or are you going to wait for it to consolidate, maybe bounce a little bit, and then take it, to the downside, right? Always remember, stocks don't go straight up. They also don't go, straight down either. And there's always going to be these staircases that form, and you have to wait for that to form to be able to take the next leg down or up on stuff if we, get a continuation move. Now, always remember, whenever the market does pull back, right, that is when you have the biggest opportunity. The most money is made during corrections. It's not made when stocks are trading at all-time highs. The biggest opportunities are when things pull back. So if we do get a trend that is actually going to sustain in the next few weeks, there's going to be a ton of good opportunities. And I'm personally looking to size up and really take advantage of this opportunity. So far on the year, I have about a $300,000 P&L, and I'm looking to make this my first $2 million year in trading. So we'll see if we can end up doing that. Look to push the envelope whenever we get the opportunities. So I hope everyone enjoyed this recap. If you like this video, please drop a like, subscribe to the channel below. I appreciate the support, and I'll see you all in the next video.